Welcome back. So the cues are positive, lots of green across Asian screens. The implied open is, not quite in sync with how some of the Asian markets are doing. Let's see how this actually plays out. Could be a little different when the market finally opens. Let's boil this down to stocks then. Our team is standing by with the CNBC-TV18 list of top stocks to watch. And Nigel will kick it off because we have the big numbers from Tata Steel. Nigel.
Well, that's right. Tata Steel's numbers were good, actually. So I'm going with green on this one because the EBITDA number was better than what we were working with. And there's an adjustment out there because there's a forex element on the intercompany debt and receivables that, is included out there. But even adjusted for that, the EBITDA number on a consolidated basis is better. The other expenditure was lower due to lower royalty relating to the lower consumables. So that explains why, in fact, the consolidated number is better. But for Tata Steel, we look at two key numbers. The India business, which is bulk of its profitability, the EBITDA per ton was better than what we were working with. And Europe was as bad as expected, with Netherlands giving you $19 per ton positive number, while UK gave a negative $300 per ton. So $75 per ton of a loss, that's acceptable. Well, the net debt number, that's perked up. So we'll wait for clarity on the way ahead. The stock should open up mildly in the green because these numbers are an operational beat.
Okay, all right. So Tata Steel, perhaps we're going to see some green over there. Let's quickly move on. Vinny is joining in Apollo Hospitals. Vinny, morning. Good performance here as well.
Yes, good performance here as well. So we're expecting a green here because it was a beat on the margins as well as the profitability front. When you look at it, the revenue of the company, that also saw a growth of around 15%. And that was, when you look at the segments also, all these segments managed to see those mid-teen growth, whether hospitals, Healthco or AHLL, that also saw a growth of 14%. Overall occupancy, that has also seen a good improvement on a year-on-year basis, as well as the Apollo Healthco segment. Keep an eye out on that because that has come into profit this time versus a loss last year. So all in all, good set of numbers, operational beat coming in because EBITDA margins have seen a growth of around 200 basis points. 14% is what the EBITDA margin stood at.
Okay, Vinny, thanks a lot for that. I'm looking at Hindalco because Novelis came out with its set of numbers. The net sales were up by close to around 5%. The adjusted EBITDA number came down by close to around 5%. And the volumes were higher by close to 100%. That adjusted EBITDA number includes close to $25 million because of flooding that they saw at their Switzerland facility. Even adjusted for that, you'll have the EBITDA per ton that will come in at around $502 per ton. The reported number is $489 per ton. So the numbers for the past quarter were weak. But the stock will pull back today, and that's because they're uncertain with regard to their guidance going ahead. Earlier, the management said the EBITDA per ton will head back to around $525 per ton. Now they're revisiting their guidance, which will clearly be a negative because it's come out of nowhere. And the net debt number, well, it's perked up a little bit because of capex as well as working capital cycle getting elongated a little bit. And the reason that they are a little uncertain on the EBITDA per ton guidance is because scrap prices have gone up because of a lot of buying we're seeing in China. So Hindalco opens up in the red.
All right, Nigel, thanks very much. Lots of earnings, right? It's a busy evening, busy morning, busy day. Well, let's talk about Power Grid now, which reported second quarter numbers as well. Vivek is here with details. Vivek, morning.
Well, good morning. Slightly subdued quarter as far as Power Grid was concerned. It's missed across the entire all set of parameters as far as the CNBC-TV18 poll was concerned. The revenue is largely flat on a year-on-year basis. EBITDA down 2.1%, and margins have actually contracted close to 190 basis points on a year-on-year basis. Profitability aided by higher other income, and other expenses too have spiked up, but higher other income has actually aided the profitability this time around. Now, talking about the segmental revenue performance, transmission revenues are up 2%. Consultancy revenues is up 7.2%. Off a lower base, telecom revenues have jumped up almost 36%. Along with that, the company is also going to be transferring 26% stake in 4 of its projects to the listed InvIT, that is the Power Grid InvIT. Now, FY25 capex guidance at the end of Q1 was close to 18,000 crore. Analysts are expecting a slight uptick over there. Order book remains strong in terms of both when you're talking about the kind of projects that they have as far as the TBCB is concerned, as well as the smart metering. All eyes on the November 8th analyst meet, where there will be more details that will come out.
Okay, all right, Vivek, thanks a lot for that. But Vivek, wishing you a very, very happy birthday. Good wishes, have a good day, and we look forward to the big treat later today. So wishing you well.
Thank you so much.
Well, let's move on. I'm looking at JSPL as well. I expect the stock to open up in the green because the consolidated numbers were mildly in what the street was working with. And the beat came in because of their subsidiaries, actually, which did better than what was expected. The India business was more or less in line. So that's why you have the revenue number that was in line. The EBITDA number was better and the margins as well better. The other expenditure, that came down by close to around 16% or thereabouts. And the gross margin as well expanded, which caused the EBITDA number to come better. Domestic steel business on expected lines. They had a maintenance shutdown. Exports have been weakish. As also, so on expected lines, we did see a degrowth of close to 11% on a quarter-to-quarter basis. The standalone EBITDA per ton, well, that was in line with what we were working with. The net debt number has moved up. The key trigger is they have an expansion that's coming on stream. 3.5 million tons likely to come by the end of this fiscal, which is important. I'm going with green because the past quarter's numbers are more or less in line, and the EBITDA per ton will improve from here on as spreads improve.
Okay, all right. So that's JSPL. Let's head across to Mangalam to figure out how the quarter has been for Kansai and Nerolac. Mangalam, Berger was quite a washout thanks to the monsoons. What about Nerolac?
Well, Kansai and Nerolac makes Berger's numbers look a little better. Berger had said that they've gained market share, and Kansai's numbers tell you that as well. We remember we don't have the numbers from Asian Paints coming in yet. So Kansai and Nerolac, the revenue actually declined by 0.3%, and the EBITDA as a result of which was down by 22.5% at 212 crore, 177 crore versus 212 crore. The net profit, on the other hand, saw a decline of almost 31% as well. There was a margin contraction too. What exactly happened out here? Well, the company said the margins were impacted by product mix and ongoing investments in capabilities. The overall demand in decorative was affected due to heavy rains and extended monsoons. That's something that a lot of the building products players have been saying. But after the stock opens in the red, let's see whether it sees a recovery or not, just like Berger yesterday, because raw material prices, which initially showed inflationary trends, have now begun to cool off. And good monsoons also means better second half for all these building product companies. So see some red at the open and thereafter recovery.
All right, Mangalam, thank you very much for that. Gujarat Gas is what we want to focus on next. Sonal is here with details. Sonal, morning.
Good morning, Prashant. Well, it was a margin beat, but a volume miss, something that we've seen with other city gas distribution companies as well. So versus the poll, we saw a slight decline in the revenues, but EBITDA was much higher. Margins were 200 basis points higher than the poll, and profits accordingly were higher by 50 crores versus a poll of 254 crore rupees. Sequentially, it was a decline. That is something that was expected as well, but was lower in terms of EBITDA. Revenues down 15%, EBITDA down 4%, and profits were down 6.7%. Volumes as well, it came in lower, 8.75 MMSCMD versus an estimate of 9.1. This was led by lower volumes in the Morbi region because the industrial volumes are not picking up because of lower export demand. But going with green because the margin expansion is much better than what the street was working with.
Okay, all right, Sonal got that. Thanks very much. So we'll keep Gujarat Gas on our radar as well. Let's go across to Sudarshan, who's looking at, I think, endurance tech. Morning, Sudarshan.
Morning, Surabhi. So, company has reported good set of results in a tough environment. Profit has increased 31%. EBITDA has moved higher by 20%. Even margin has expanded by more than 50 basis points. And the earnings are led by volume growth that has come in from two-wheelers and three-wheelers, while India passenger volumes and European car registrations have been under pressure. Even on the order wins front, company has bagged orders of more than rupees 120 crore in the Q2. And with this, H1 FY25 total order wins are at 308 crore. Also, they have more than 2,200 crore RFQs under discussion with various clients. RFQ is request for quotations that company will be implementing these orders in coming quarters.
Okay, all right. Sudarshan, thanks for that. Well, hopping across to Upasana, who's here to tell us about Blue Star's Q2 numbers. Upasana?
Well, Nigel, companies reported stable set of numbers. Revenue was above street estimates, while EBITDA margin and PAT stood somewhat in line with the street estimates. Now, coming to revenue first, it stood at 2,276 crores with an uptick of 20%. This revenue growth was mainly led by company's strong performance from its EMP and commercial air conditioning segment. Now, EBITDA margin stood at 6.6% with an uptick of 10 basis points on a one-year basis, while the street was estimating EBITDA margin somewhere around 6.8%. Now, PAT stood at 96% with an uptick of 36% on a one-year basis, and PAT growth was mainly aided by the rise in the other income. Now, order book of the company stands at 6,598 crore with an uptick of 9% on a one-year basis. So, all in all, we are seeing a stable set of numbers from Blue Star.
Okay, all right, got it. Thanks very much for that, Upasana. Let's go across to Vinny once again, who's looking at Wockhardt. I believe there's a QIP in the works, Vinny, for Wockhardt.
Yes, there is a QIP that we're keeping an eye out on. It's overall 1,000 crore total issue size of the QIP. It has opened up yesterday, that's 6th of November. And what we're keeping an eye out on, in this, the base issue size is around 800 crores. There's a green shoe option of 200 crores. And the price that they have decided, the issue price is around 1,105 rupees per share, which is at a 13% discount from yesterday's closing price. So we are expecting some bit of a red on the stock today. And obviously, do not forget that the stock has already seen such a good run up, right? Just the last 1 month, around a 34% uptick. In the last YTD basis, also 170% uptick. So maybe some bit of a red that one could be watching out for on Wockhardt, given that the issue price is at a bit of a discount from yesterday's closing price.
Okay, all right, got that. Thanks very much, Vinny. So let's quickly recap our list of stocks to watch. The ones that have positive news flow are Tata Steel, Apollo Hospitals, Jindal Steel and Power, Gujarat Gas, Endurance Tech, and Blue Star. The ones that have negative news flow around them, Hindalco, Power Grid, Kansai, Nerolac, and Wockhardt. Okay, so let's figure out what the great Trump trade has meant for the world of commodities. Manisha is joining in. Manisha, I hope you managed to catch your breath with, the cryptocurrencies dancing, yields, dollar, everything going all over the place, right?
Oh, yes, it is. And, with the commodity prices clearly have reacted in a big way to Trump victory. Expectations of fiscal spending, tax cuts, concerns on trade tariffs on China, sanctions on Iran, Venezuela are perhaps all on the list. So that it is reacting on. And I want to talk about metals because we've seen a very sharp overnight decline here. You had the steel prices falling to 8-week lows, zinc to 6-week lows, to month lows. Asia right now clearly has seen a bit of a rebound, and that's ahead of the U.S. Fed meeting today and the expectation that after everything is done, China tomorrow could be coming out with a stimulus measure. So that hope really is keeping the prices up. But what is not doing well at all is the gold and silver prices. Gold fell 3% overnight, silver 5%. One certainty is out of the markets, and that safe haven trade perhaps seems to be unwinding. And precious metal prices in the Asian markets right now also have seen further declines continuing.
All right, Manisha, thank you very much for that. So that's commodities and what happened last night and what's happening right now. We'll take a break. We're going to come back. Deepan Mehta, Wellingsford Equities, will be with us. Rajiv Agarwal of Doordarshi India Fund will also join in for some specific stock talk. Stay with us.